Hi everyone, why so serious? Let's begin. A successful trading stands on three pillars. Number one is psychology, which is what this channel will mainly focus about. Number two is the fundamental analysis, which I believe is useful in the long run. And number three, which is the final one, is technical analysis, which I'll be talking about in a second. So there's a man called Dan Zanger, where he grew his investment from $11,000 to $42 million in 23 months. It's like less than 2 years. He practically 3,800x his net worth in less than 2 years. So what's Dan's trading strategy? His investment style is to find volatile leading stocks in the market with profitable chart pattern. And he uses this information to swing trade stocks as they emerge from defined patterns. So let us learn about chart patterns so that we can trade like Dan Zanger. Okay, so basically there are two types of chart. One is the bar chart. Number two is the Japanese candlestick chart. For the bar chart, it's not so important, but I'll show you guys. So bar chart is like this, where you can see that so for the green one is bull chart, so the red one is the bear chart. So as you can see, this line over here is the opening price. If it is $10, so it opened at $10. So the one above is closing price, which if it is 12, so it closed at 12. So yeah, this is the bar chart. So this is the highest level, this is the lowest price. And for a bear chart, this is the lowest price, this is the highest price, this is the closing price, and this is the opening price. For example, if it opened at 12 and it closes at 10, so this is a bear chart, which means you're losing money. Okay, so for the Japanese candlestick chart, it is a more commonly used chart, which it gives better clarity, I guess. So this is the increasing bullish candlestick chart, where opening price is over here. This is the opening price, and this is the closing price. Say opening price is $10 and the closing price is 12, so this is a bullish one. And this is actually the body of the Japanese candlestick chart. This is the highest price it reached for that day, and this is the lowest price it reached for that day. For a decreasing bearish candlestick chart, this is the opening price. Okay, say it is a $12, and when it drops to $10, and this is where it closes. Okay, so this is the body, highest price, lowest price. Yeah, it's kind of easy to tell. Okay, now let's go to trend. The importance of identifying a trend is to trade in the direction of the major trend. As they say, go with the flow, join in the bus ride to the moon, or the trend is your friend, etc. So what are the advantages of identifying a trend? Number one, much of the big money is made in a strong trending market, whether it's up or down. Number two, you will lose money or your money will be stagnant in a sideways trend. So it's better to stay aside while it is a sideways trend. Number three, you will know when the trend is changing so that you can ride and profit from the big moves, or you can avoid big losses. So what's the definition of a trend? So trend is the direction of the market. It can be uptrend, where there's a series of successively higher highs and higher lows. Then there's downtrend, where there's a series of lower high and lower lows. And finally, there's the sideways trends, where it actually shows the consolidation of the market. Okay, first of all, we need to know how to draw and use a trend line. Okay, so we come with this. First would be uptrend line, where we need to connect 2 points, where the lowest low and the higher low. Okay, this is the lowest low, this is the higher low. With 2 points are required to draw a trend line. The third point usually is the one that we confirm the validity of this uptrend line. So this is the first point, lower low, higher low, the first, second, and the third point usually confirms the validity of this uptrend line. Okay, so let's get a real life example in a Microsoft company. Okay, this is Microsoft stock, where we can actually draw a trend line from here to here. Okay, so lowest low, higher low, lowest low, higher low. Okay, this is a very good trend line. As you could see, normally it doesn't really breach this uptrend line. See, whenever it touches this uptrend line, it will just, you know, jump back up. Okay, spring back up, going down, spring back up. So okay, this is a very good example of an uptrend line. Another one I want to show you will be Teladoc company, where let's see, let's draw an uptrend line here. From here, this is an arrow. Okay, sorry, we're gonna go with line. So this is an uptrend line. So yeah, so you could see this is the lower low and higher low, the lower low and the higher low. Okay, so this point actually bridges this uptrend line as you could see. So let me draw an arrow here. Okay, so this is actually a selling point, you know, in a technical basis. So you could see this uptrend line initially is good, but after it breaches this uptrend line, you could actually sell here in a technical way. Okay, so since it goes back up here, as you could see, once it breaches this uptrend line again, it will be another selling point. Okay, so we call it, okay, let's see, let's doodle sell. This is sell. Okay, sell point. So yeah, to avoid further loss, usually when this uptrend line, this really validated uptrend line is bridged, it is a good selling point, especially over here. So to avoid further losses. Now we will go to the downtrend line. So this will be example of a downtrend line where we connect 2 points, the highest high to the next low high. Okay, the highest high to the lower high, number 2 and number 3. So this third point actually confirms the validity of this downtrend line. Okay, let's go to the real life example. CMLF stock will be a very good example for this. Okay, so we're gonna draw a line where we connect the highest high to the lower high. Okay, highest high, lower high, highest high, lower high. Yeah, this would be a 1, this would be 1. So as you could see, the highest high, lower high, highest high, lower high. So this would be a 1 point. Okay, so as you could see, this line is not really that nice. We could actually draw another line here, this line from here to here. Okay, so you could draw another line here, the highest high, lower high, highest high, lower high. So you could see there's actually one nice point, one nice arrow where we could show a buy signal. Okay, so whenever this downtrend line is bridged, okay, we could call this, what do anyone know what this point called? It's called a buying point. Okay, or buy signal. So it's actually a good way where we could use this technical chart to buy. So once you see this downtrend line is bridged, you could actually buy here. Okay, so it actually rebounds, but yeah, so this actually helped. Well, now that you know the concept of a trend and how to draw a trend line, let's proceed with support and resistance lines. Okay, so with this picture we'll show the support line first. So this is a line, is an area where buyers surface to absorb the selling pressure. It halted a decline usually. So whenever a stock goes down, the downward pressure will be stopped here. Okay, so when you go back up again, and then it will came down again, and this falling knife is absorbed here. Okay, so this support line will be formed here. Okay, so for example, if this line is bridged where the stock came down and bridges the support line, okay, so this would be a sell signal. Okay, so this is here our stop loss will be, okay, to avoid further loss. So the next line will be the resistance lines, which is over here or over here. You can draw this too. So I'll make an example for this line first. Okay, so this is an area where sellers surface to absorb the buying pressure. this is where the advance of a stock is halted. So you see it goes up here, and then the advance is stopped at this resistance line, resistance point, came down again, and it goes up and it stopped here. This resistance line is quite strong. Okay. So for example, if this resistance line is bridged, the stocks came up, and then it bridges this resistance line. So this line, this point, will be a buying point or a buy signal. Okay. So this usually accompanies with a very high advance of the stock. Okay, for example, I will show you this Teladoc stock. Let's draw the support and the resistance lines. Okay, so line, we gonna draw a support line first from here to here. Okay, so you could see this is a very strong support line, and you could draw another line. This would be the resistance line, and this one would be another resistance line. Okay, so we're gonna draw this is the resistance line. Okay. As you can see, the stock tries to go up and bridges this resistance line, but every time it reaches this line, it will came down again, goes up, and resisted over here. So when we could draw an arrow here, so what does this arrow tells us? It is a buy signal. Okay, so you could see this as a buying opportunities. Whenever there bridges a resistance line, it's a very good buying opportunity here, and you can see that the stock keep on going up from this line after it bridges this resistance line. So let's go for another line. You could see there is another support line here. Okay, I'll undo this. I'll draw a better one here. Okay, oops, we'll do this line. Okay, yeah, so this would be a good support line as we could draw. So this support line, whenever the stocks came down and down and down and reached this line, it actually goes up again. So this example, it goes down here, goes up again, goes down here, goes up again. So this is quite a good support line. So when they bridge this line, we could draw another arrow here. So when it bridges this support line, it is actually a sell signal. Okay, so this is a point where we sell cut loss, or at least to take profit before it goes lower. So these two resistance and support line is actually very useful, where we can get the buying signal and the sell signal for a stop loss. Alright, I hope you guys learned something about chart pattern analysis today and could use this method to find the best timing for buying or selling your stock. Thank you, and why so serious?